Oh my gosh, SoFi is going absolutely insane right now. As I'm recording this video, it's up over 20%. This is on the back of their Q2 earnings that they just reported earlier today around 7 a.m. Eastern time. We're gonna go through all of it, the good, the bad, the great, the things that I think are really important to talk through. We're gonna hit those points. And most importantly, we're gonna talk about if this changes my thesis around SoFi at all. Does it make me more bullish? Does it make me more bearish? Does it make me a holder? Does it make me a buyer, a seller, etc.? But first, if you're new here, welcome. I'm Austin. I'm a co-owner of CloudBusinessSuite.com. I'm a stock market investor, of course. And most importantly for this video, I am a SoFi shareholder. I've been a shareholder since just after they went public through their SPAC merger. And congrats to any fellow SoFi shareholders out there. It's been an amazing year so far, and I'm looking forward to an even better rest of 2023 as we move through Q3 and Q4. Real quick, the channel's sitting around 1,100 subscribers, somewhere around there. I don't know where we'll be by the time I post this video, but if you're one of those people and you're back, thank you so much. If you're new here, go ahead and hit that subscribe button and click the like for me. As a thank you for doing those two things, here's a picture of both my cats, Millie and Luna. Millie's the gray one, Luna's the brown one. They thank you for subscribing. Okay, let's get into this. SoFi reported their Q2 earnings today, and they had a triple beat. What that means is they beat on revenue estimates, they beat on EPS estimates, and they raised their full year 2023 guidance. And we're gonna get into all those numbers. There's a few things I really liked about this earnings report. There's a few things I didn't love about the earnings report. I wanna talk about all of it. But real quick, SoFi's up over 20% just today as I'm recording this video. It might move up more, it might move down more, we'll see. But that brings the year-to-date return to above 150%. So if you would have bought just a few short months ago, you could have made 150% on your money with SoFi. That's absolutely insane. It's been a ridiculous year. So congrats to all you guys out there. So let's dive in. We're gonna start with the headline numbers. And the first headline number is that revenue number. So revenue ended up beating by about 9 million. And that's up 37% on a year-over-year basis when you compare it to the year earlier quarter, which would be Q2 of 2022. That's something I talked about in my SoFi earnings preview, is that I wanted to see somewhere between 30 and 40% revenue growth. I didn't care where it was in that range. If they would have come in right at 30, 31, 32, etc., I would have been happy, but I'm really excited to see this 37%. That's on the high end of the 30s, so I'm happy to see that we're still really close to that 40% mark as it relates to revenue growth. They also clocked in record EBITDA at $77 million, and that's up almost 300% on a year-over-year basis. That's because they're turning that corner from being negative in the EBITDA to being positive in EBITDA. And just remember that EBITDA stands for earnings before interest, taxes, depreciation, and amortization. So we'd like to see that. That's very positive as it relates to the EPS number that we'll talk about later. And then here's another thing I talked about in my SoFi earnings preview video, which was the total deposit growth. Total deposit growth of $2.7 billion. I was looking for anywhere above $2 billion. There was actually a news article that was released that said they had $3.2 billion of total deposit increases. Maybe that news article was correct and they had $3.2 billion of inflow and then $500 million of outflow. I don't know. I didn't really look into that. I just decided to wait until the actual numbers came out from SoFi. And then lastly, as it relates to headline numbers, they raised their full year guidance. So that's bullish, but it wasn't a massive beat as it relates to raising guidance. One of the most exciting parts of SoFi's business is the technology platform. And what I wanted to see as it related to Q2 was technology platform accounts growing from Q1 to Q2 of 2023. We did see total technology platform accounts growing up to 129 million from 126 million in Q1 of 2023. And that was after a decrease of multiple millions from Q4 to Q1, which we don't like to see. So I'm glad we're back to growth as it relates to total connected accounts for the technology platform. One thing I'm really excited to see, which is actually really underrated with SoFi, being that one-stop shop finance app, is actually that SoFi was able to grow the SoFi Relay, which basically tracks all your accounts. You can connect all your accounts to it, your bank accounts, your invest accounts, your mortgage accounts, your credit card accounts, your loan accounts, etc. And you can connect all of them through SoFi Relay, and then SoFi Relay keeps track of them. So basically, you're letting them have a peer into your financial life so that they can market to you a little bit better based on your current financial situation. This product grew 90% on a year-over-year basis, up to 2.6 million customers having SoFi Relay enabled. So that's 2.6 million people that they can use as data points to figure out when is it best to market to someone a specific product based on their specific situation with information that they're allowing you to see through enabling the SoFi Relay. So I think that's absolutely genius and very much underrated. But one thing we're all excited about with SoFi is those student loans coming back in the back half of 2023. SoFi used to get an insane amount of their revenue, somewhere around 60% of their revenue, from student loan originations alone. For the past few years, obviously that's been an extremely weak point in SoFi's business model, but they've been able to replace that with mostly personal loans. And this is evidenced by the fact that the origination volumes for personal loans were up 51% on a year-over-year basis, up to $3.7 billion. And we can see that student loans were actually down on a year-over-year basis as it relates to origination volumes to $395 million. So as we move through the next few months and we start to see these waves of refinances go on because the student loans are coming back, SoFi is definitely the best position to take advantage of this. I would bet that line item in the Q3 2023 results is going to be a massive year-over-year change difference. That all remains to be seen, and that is if the student loans do actually come back. I do think they will, but there's still a lot of uncertainty around it, and people aren't 100% sure. They're not convinced that the student loans are going to come back. So I think that's why we're seeing the lower origination volumes. I don't think it's anything wrong with how SoFi is handling the situation and how they're marketing. I don't think they're being ineffective marketers as it relates to it. I just think it's consumer is not really convinced the student loans are for real coming back in the back half of 2023. So let's go back to the technology platform for just a second, which is actually one of the sides of the business that I'm most excited about as a SoFi shareholder. And this is one of those things in the Q2 earnings that I was not super excited about. We look at year over year numbers. There was only a 4% increase as it relates to total revenue from the technology platform, up from around 84 million, only up to 87 million. And even worse, directly attributable expenses to the technology platform rose 14%. Revenue from that segment only rose 4%. So their expenses are rising more than 3x faster than their revenues are accelerating on the technology side of the business, which is definitely not something we like to see. And to drive that point home a little bit more, contributable profit from the technology platform was down 21% from 21 million down to 17 million. I am not excited to hear that. That is definitely the worst thing I saw in this entire Q2 earnings report. The only good thing about this is that SoFi actually had a little bit of positive commentary around the technology platform in this paragraph right here. Number one, they said that total enabled accounts grew by 11% on a year-over-year basis. 11% is not great, but it's nothing to sneeze at. And then they said, we have made great progress on our strategy to sign larger and more durable clients. That's what they were talking about in Q1, and that was their reason for why customer count dropped from Q4 of 2022 to Q1 of 2023. And then they say Galileo signed 5 new clients and the Technesis platform signed 4 new clients. And then they said, additionally, we have a robust pipeline of ongoing discussions with potential partners for a large existing customer bases both across the US and Latin America, spanning the financial services and non-financial services segments. I would love for them to stay in the financial services segment and not worry too much about the non-financial services segments. Speaking of financial services, the financial service revenue for Q2 of 2023 was up 223%. And by the way, that's over a 3x. So they went from 30 million up past $98 million. That was driven primarily by 188% growth in segment interchange revenue and a massive 477% growth in net interest income. That's ridiculous. Financial services segment of the business is not profitable yet, but that contributable loss is decreasing at an insane clip of 92% on a year-over-year basis. In the year ago quarter, they lost $53 million as it related to the financial services segment. This year, Q2, they lost $4 million as it relates to financial services segment. So that's a 92% decrease in the loss. Obviously, we want to see profits in that as we move to Q3 and Q4. And just to cap off the strength of the financial services growth, check out this chart right here. We have a 47% increase in SoFi Money, 18% increase in SoFi Invest, 53% increase in the SoFi credit card, 69% in referred loans, 90% increase in SoFi Relay like we were talking about earlier, 45% increase in the SoFi at Work, and then that leads us to a total financial services product increase of 47%. The product growth is massive in the financial services side of SoFi. We'd love to see that. One of the biggest things that moves stocks up in the short term is actually guidance. Rather than the quarter that just ended, talking about the quarter that's coming up and the next few quarters that's coming up can move the stock in a massive way because the stock market is very much forward looking. So as it relates to guidance, full year 2023, SoFi raised the bottom end and the top end of their guidance just a little bit. So that revenue outlook was increased by about 1 to 2%. That's not bad at all. But what's really amazing is their full year EBITDA guidance. That's earnings before interest, taxes, depreciation, and insurance. They went up from 268 million to 288 million, all the way up to 333 million to 343 million. And that doesn't include any potential guidance raises as we move through Q3 and Q4 of 2023. This gets me really bullish for the EPS numbers that we're going to see in Q3 and in Q4. SoFi reported an earnings per share of -6 cents. I was not excited to see that number. Yes, it was a slight beat from the -7 cents that was expected, but to see -6 cents after they posted 2 quarters in a row of -5 cents, I was not excited to see that. I wanted to see something that was a little bit closer to positive, maybe -2, -1 cent, somewhere around there of EPS. So that -6 cents in Q2 was not exciting to me, but the EBITDA raise makes me excited to see the Q3 and Q4 numbers as it relates to EPS. I think Q4 2023 could be the first EPS neutral or EPS positive quarter for SoFi if they keep on executing how I think they're going to. They posted a net loss in Q2 of 2023 of $47.5 million, and that's heavily on the back of sales and marketing expense rising substantially, and then the technology and product development expense also rising in a massive way, up over $27 million on a year-over-year basis, with the sales and marketing up almost $40 million on a year-over-year basis. I'm happy that they're investing money into getting more customers and getting more total product growth, because that's going to grow this company into a beast over time. But also, I want to see GAAP profits sooner rather than later. And with this company still being EPS negative, it risks the situation a fair amount for investors. And a lot of investors will just never touch a EPS negative company because there's no PE on it. There's no earnings. There's no income from operations that they can use to fund their business. So there's only a certain runway of growth that they can have while posting net losses quarter in and quarter out. I still see the path forward for SoFi as it relates to getting the EPS positive, but I wish it was happening a little bit faster than it is. And I really wanted to see somewhere around -3, -2, or -1 cents of EPS in Q2 to get me excited about Q3 and Q4 as it relates to the EPS numbers. The assets to liabilities situation is looking okay, with them having $6 billion more in assets than liabilities, so that's nice to see. But the cash to debt situation is not as good. It's certainly better than it was about 6 months ago, around December of 2022, by about 80%, but it's still not in an amazing spot. We have total cash of $3 billion and then total debt of $6.5 billion. I would like to see those numbers closer to equal in the near term, and in the long term, considerably more cash than total debts. So there's definitely some really good things about this earnings. There's some not so great things about the earnings, but most importantly, does this change my thesis around SoFi? Am I going to be a seller now? Am I going to buy more shares now? Or am I just going to hold? The answer to that is that I am just going to hold my shares. I hit my share allocation goal around 3 months ago. And since then, I've just been a holder of SoFi. It's a very heavy portion of my portfolio, and it's an even bigger portion of the portfolio since it's been up so much this year. So I'm just a holder. I'm happy with the amount of shares I have. I would say overall, this Q2 earnings made me a little bit more bullish on SoFi. It made me a lot more bullish around the financial services segment of SoFi, and it actually made me a little more bearish around the technology platform side of the business. We really need to see that technology side of the business start to ramp in a massive way over the next few quarters, or that side of the business, which they've talked about being the AWS of Fintech, is going to start to be a little bit lackluster. Seeing only 11% growth on a year-over-year basis is really not what we'd like to see. That, in conjunction with the fact that Q4 total connected accounts on the technology platform were higher than Q1 and were higher than Q2 of 2023. So we're not even back to the numbers on the technology side of the business that we were in Q4 of 2022, 6 months ago, as it relates to total connected clients. The EBITDA guidance range being increased by so much is one of the things that makes me a little bit more bullish around SoFi, along with, of course, the financial services ramping in an insane way. I would consider it a near fact that student loans are going to come back in the back half of 2023, and I believe that SoFi is the best positioned and best capitalized to take advantage of those massive amount of federal student loans that are about to be refinanced. So I'm looking forward to seeing those numbers as it relates to student loans in Q3 and in Q4 to cap off this year with SoFi for another record year of revenue, of EBITDA, of earnings, of total products, etc. Did this earnings report make you more bullish? Did it make you more bearish? Are you excited? Are you not excited? I'm definitely excited that we got a 20+% move today. I don't know if it was totally warranted. This doesn't change the business in a massive way. You know, these analysts are out here raising some of their price targets by 50% just in one day after these earnings. These earnings do not make me think that the price target should boost by 50% in one day. They weren't like crazy blow off the top, crazy insane earnings. Just be careful checking out those analyst price targets. Make sure you agree with the pricing of the stock. I want to know what you're doing out there. Let me know if you're buying, selling, holding, shorting SoFi. If you have any call option situations, if you have any put option situations, I want to know about it. Let me know in the comments. It's one of my favorite parts of posting here on YouTube every time is checking out those comments. So get down there. Let me know what you think. Thank you so much for being here and have an amazing day.